economy as GDP expands by 0.8% in the second quarter, the fastest growth in more than a year. The rebound was powered by mining that was up 3.7% on strong platinum and gold output, as well as manufacturing, which also climbed 1.8%. That's thanks to chemicals and motor vehicles. Consumers also played their part, spending more on restaurants, clothing and footwear. Year-on-year GDP rose 0.6%, easing pressure after months of weakness. However, economists warn that global trade tensions could dampen the momentum.
Headline GDP rose moderately in the second quarter of 2025, ahead of Q1's measure. The outcome, however, is still reflective of a subdued domestic economy, which continues to face a myriad of structural challenges, notably on the logistics front, continuing to impede optimal economic activity and export potential. Additionally, high costs of production, particularly on the electricity front, continue to weigh on the country's competitive position, while the changing global trading landscape with the imposition of the tariffs has caused elevated uncertainty. The increase in GDP was largely broad-based, with most sectors growing over the quarter, excluding the construction sector and transport, storage and communication. The largest positive contributors to the headline reading were the mining, manufacturing and trade sectors. Household consumption expenditure, which makes up around 2/3 of GDP, so is very significant, rose when compared to last quarter's reading. The increase in expenditure came from increased expenditure on semi-durables, durables and the services category, while spending on non-durables contracted over the quarter. If we look at a breakdown, notably there was significant expenditure on clothing and footwear and restaurants and hotels, which increased by 3.4% and 4.8% quarter-on-quarter and seasonally adjusted respectively. Going forward, in order to boost the country's growth and investment and create jobs, we, however, need a notable, significant lift in business confidence, which actually slipped in the third